The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's Monday morning in the States. It's Monday night here in Asia. A little bit of volatility last week, huh? But, what was that all about? Slower economic growth in Europe, possibly. Ebola, they're saying. Middle East, Ukrainian problems. But, one of the main things, I think, is, I always talk, I've recently kind of harped about, what's the Fed's actual role. I think because of the lower rates that they keep pounding into the ground, they've started creating a class of investors that want to go after larger returns in treasuries, but somehow stay in the safety of the bond market, whether it's convertible bonds or corporate bonds or exotic products that really don't have any liquidity at all, actually. And, people trying to sell instruments where you have to make an appointment to get a market put together on it. It's very similar to the situation that we had back in 2008 with the exotic products that some of these, institutions had created to cover debt in some of these housing markets. So again, this is something where I read some information this weekend that, those classes of products have really gone up twofold since 2008. So, we had a class of products that were illiquid as heck that nobody could get out of, that were on, institutions and banking books as a certain value. But, how do you determine the value? We've almost got a replay of that going on. And what people were doing supposedly last week was selling instruments that they actually could get liquidity on to dump in times where they needed to sell assets. I'm being told my picture is getting really bad. Can I go ahead and reconnect or no? Getting an answer on that right now. Go for it. Okay, I'm going to reconnect in just a second, folks. Hold tight. Okay, cool. Yeah, so, they've almost created a class of investors and a new class of assets where there's not a lot of liquidity, and people are reaching for, those returns that they feel like they're in the safety of some kind of, bond market, so to speak, because the treasuries are so low they can't, for the life of them, I guess, quantify the risk involved and the returns that they're getting. So, had some people selling assets last week in markets that they actually could sell, I guess, and that was the U.S. stock market. U.S. stock market is still the most liquid thing in the world here. But we had, the economic growth, if you believe the government's numbers, this is a big if here, everything's great in the U.S. And it's really weird because I think it's the first time, we've got Europe down this morning. Forget about IBM for a second. But we've got Europe down this morning. We've got Asia up. And Europe's down because, they're considering doing unconventional measures, so to speak, to basically, do the same thing that we did. They learned, I guess, from what we did, and that could end terribly. But the U.S., supposedly with the Michigan sentiment numbers that came out Friday also, everybody's happy and the unemployment rate's lower, and Europe's in a different situation and Asia's in a different situation. So, these markets could possibly start showing some divergences, and I think they are, and they're obviously going to have some immediate monetary policy type differences. Now, will those come back in some kind of arbitrageable fashion at some point? I think the answer is yes, because this is a global economy, and all these things are so interconnected now that you can't ignore some of the things that are going on, in China when you talk about the U.S. economy in the same breath. So, it's interesting times to say the least. And, IBM this morning, let's get into that. Let's just pull it up. I think I'm going to be able to pull up stock charts here. We've got a problem with the CME again with eSignal. It's not eSignal's fault, probably. I talked to him about that the other day. Let's take a look at IBM, and I'm going to have to scroll this out. Excuse me, folks. I think it might be better to choose IBM from the list here. Well, we're going to try this again, typing it in. Come on, eSignal. Okay, here we go. All right, so, IBM's off quite a bit this morning. Here's the real-time information, probably on Instanet. We've been as low as 166. We're trading 170, 71. As you know, IBM, I think the second biggest component in the Dow. I think Visa's ahead of that. So, and again, we're not getting daily and weekly charts here on some of these instruments that we look at. So I apologize for that. And that's actually not anything having to do with the connection. That's a situation between eSignal and some exchanges. But I think we closed. Let's just see where we closed here on Friday on IBM. Yep. What is that? 182. So 171 pre-market now. And I was never a big fan of IBM. I think Tom O'Brien has really never been a big fan of it the past couple of years. Big Blue. You got to always look at it, because if you're trading the Dow futures, absolutely you got to look at it. But, IBM is kind of unwinding, in my opinion. And I think it's going to continue to unwind. And I think they're probably ultimately going to be selling off some components or divisions of IBM. But IBM, and this is a little fundamental news here, IBM is just overweighted with government contracts that seem to slip away over time. And I don't know if they can compete. And again, these are fundamentals we're talking about, because I cannot get our daily and weekly charts that I focus on primarily to discuss things like that. So IBM is definitely going to be a drain on the futures, and we're going to look at the futures. We're only down 3, but I think we're as high as 1894 last night, which was this morning here in Asia. So 1893, 94. So we're off really from the highs. Good Lord, we slid 20 S&Ps so far. We bounced up a little bit. So let's just look at the 240s on the S&Ps while we're talking about IBM possibly affecting things today. And, we've had a huge rally in these things. I mean, we were at 1815. What is that? Let's see. The 16th. So that was Thursday. We were at 1815, and we've rallied 1894. So that's a pretty good rally in a matter of, 48 hours from that morning. So, we're not due a pullback, but the numbers that I think you need to focus on the short term, while I'm waiting for our dailies and weeklies to get straightened out, 1887 unfair highs, 1865.50 unfair lows. So that's the levels on the short term on the S&Ps. Remember, that 1858 area on the long term we talked about last week is still a big rocker arm, if you will, for me in my thinking on the S&Ps. And if you are trading the S&Ps while we're still talking about that, I'm going to pull up our breadth statistics. We're still very weighted negatively on the breadth here, even the dailies, even after that rally. So, what does this mean? The 240s and 60s obviously have kind of regauged themselves a little bit. But as we look at these breadths, what does that really mean? That means that on a daily and weekly profile for most underlying instruments, we still haven't even had price action either predict a new box, which we'll find out on the opening today. We will have some new profiles appearing. But those price actions back up into previous profiles really haven't happened. And, that in itself it's still okay to be short, not okay to be long. And as we looked at these S&Ps a lot last week to try to pick some battles, we're looking at the breadth. We're saying, what do we, what would be the trend defined? It would be short based on that alone, based on all the research that we've done. And if we're looking for a chance to opt out on longs and pick battles on shorts, then it's very explicit. Then you go into the futures profiles and try to find those battles that you want to pick based on those inflection points from the short side if you want to trade with the trend. And if you're going to do some contra trades against that long-term trend down, that's up to you. But you obviously are provided areas where you can consider that you're wrong if you're wrong. So, again, we're going to probably reboot eSignal while we're gone here, but we're getting dailies and weeklies on the currencies. So we got about 2 minutes left before we go to first break, and we're going to try to get the CME feed figured out here. But as we're looking at currencies, and we're waiting for our indicators to appear here. Michael, you want to take a look at this? Yeah. Not getting inflection points that I need to see on the euro. So we're going to try to go to the pound here and see if we've got that coming up. Apologize for these data issues this morning. Tell you what, I am going to Well, we lost our desktop connection. Sit tight, guys. Sit tight. Hey, you're going to need to take a look at this on the break. See if we can minimize this here. Well, let me pull the camera back up. Well, guys, we're going to go to break in just a little bit. In the show today, we're going to take a look at stocks that really didn't come off their floor as the market had bounced recently. And we've had a pretty big bounce. I think we were off right at 10% on the lows of the most recent move down on the S&Ps at least. And when we rallied, let's just do the math, 1815 real quick, 1894. So we're looking at 80 points there out of a 200-point move down from the highs. So we have right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Apologize for all the technical issues we were having earlier. I think we might have gotten those cleared up. Here's the euro. Let's just pull up the currencies really quick on this short segment, and we'll get a little deeper into the S&Ps and a couple other things in a second. And I'm showing the chart now, hopefully. Okay, so we promised a new profile last week because this orange bar for our weekly close Friday continued to stay orange, and therefore it was a very high percentage chance that we get some new inflection points here on the euro. Okay, so what are those inflection points? 125.74 on the bottom, 130.18 up top. POC on a new profile is pretty important. There's a lot of little esoteric things going on here when you have a new profile. 128.71 rounded off. We're trading 127.80 approximately right now. So right in the middle of a new fair auction. Nothing to talk about there except to understand those inflection points. Now let's go into the dailies where we have had a bearing on things for a while. And, I'm a big fan of being short this in general. I'm sure a lot of people are, which is kind of scary in itself. But, we've closed above. We've come back and retested this a couple of times, and we're kind of doing that classic flag thing. If you've read some books by John, God, I forgot his last name. It was like the first technical analysis book I ever read. John Logan, that's not true. It was forget his last name. John Murphy. Can't believe I remembered that. But it's a book about this thick. If you ever want to read a good book on classic basic technical analysis, it was the first book I ever read. It's very thick, and he covers it all. John Murphy, Technical Analysis of Futures Markets, I think is what the name is. Go look it up on on Amazon, you won't be any dumber for reading that. This classical flag is that, continuation pattern actually, but again, I'm not a big fan of going long this product, so I'm kind of waiting patiently until we get a close back in this fair auction below 127.36. On an intermediate basis, you can look at this as, hey, we've broken trend, and it is what it is, and we're consolidating above unfair highs. That's a fact, but I'm not a big fan of going long this product. And I think the targets that can be met on the downside ultimately are bare minimum 125.74. Now that we've got these new inflection points appearing, and usually they are explored. That's a usually being historically speaking. Let's take a look at the British pound. And this is kind of cool because we've migrated up on the British pound up into an inflection point on the daily that was hard-coded in last Friday that appeared, and the unfair highs are 161.57, and we're trading 161.50 is our high right now. We're trading a little bit below there. So, again, long-term trend is down the British pound. We've got some great trades off around 165.25 in there. Breakdowns below. Got a new high we're hitting here, which lines up pretty well with that DMZ that I talked about last week. Unfair lows around 161.39. Current unfair highs around 161.57. So we're kind of in that little no man's land area there. That's a resistance span. And the good news is you know where to put your stops above there if you're going to continue to trade with the trend on the pound down and let the profiles regulate that trade. And I'm looking at this as a long-term view on the pound. I'm not day trading this. I'm just, as a lot of guys will know, in these position trading opportunities, you get to take a lot more out of the marketplace in general. Let's take a look at the yen. I was looking at the yen this morning. The Nikkei was up about 4% today. And we're going to talk about that a little bit. But the Japanese yen, we talked about, picking a couple of battles on the way down on the pullback on the yen, and the ultimate battle to pick was that previous 105.44 area. Reached a low last week of 105.20. So we talked about picking one at 107.07, 106. Was that 106.14 and then 105.44 long side only. This thing bounced tremendously. So we're going to take a look at the Nikkei when we come back, folks. Be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Let's take a look at the yen one more time. Just wanted to hammer home what we were talking about there. For the longest time, this was just, in my opinion, it was a very boring situation, but the leverage off this 101.33 on a long-term basis was awesome. We hit 105.44 relatively quick. It took about a month to do that after we just started getting some momentum up, and then we had that close above, and then you never can hang on to everything in a trade, but we're always looking for places to buy again, and this is a great example of why stops need to be in order again. We had talked about using the daily, this collection area on the really thin profile here, just to give a little bit of an education again, and I was a big fan of just long-term collection area there. Got stopped out, tried to use another battle point around 106, was it 44, something like that? I'll review that in a second. And then the ultimate battle point was the 105.44, that previous unfair high on the weekly. So, again, it's just a good primer on why stops are so important. And again, we run automated systems, and it's always, let's try to risk one to try to make 4 or 5, and that's kind of what trading's about in a real simplistic definition. So we've now got also a new daily profile happening on the yen. Those unfair lows are 105.91, which could easily happen, which is kind of neat because on the daily you've got 106.14. So if you're a long-term player, on the yen. And I think the yen's really in play right now. I think it's a great instrument to trade if you're going to, put something on the line. You've got 106.14 down into 105.91, and that's a new collection area. I mean, we had a real serious 200 pip bounce from 105.20 to actually more 220 pips to 107.40 something. Now, do we deserve another kind of relaxing moment here to come back and give you an easy chance to get in a little bit lower? Possibly, but it's hard to chase these things. So that's kind of where the collection area, in my opinion, will be now on the yen. And that's just looking at this from a true technical analysis standpoint, using our information with not a lot of divergences really in the way when I talk about this. So that's the situation on the yen, in my opinion. So let's take a look at the dollar. It's a very, very good relationship relative to the yen. Excuse me. We kind of promised also a new profile appearing on the dollar. That's happened. New inflection points, the POC, 84.66, unfair low, 83.77, unfair high, 86.43, rounded off. Right in the smack middle there. Had that orange bar appear, closed orange, viola, as they say in North Carolina instead of Wawa. New profile appearing. So here we go. Let's take a look at the daily. And again, I'm kind of a big fan of being long the dollar. So I'm waiting for a close, even with that new profile appearing on the weekly. I'm waiting for a close above 85.40. Excuse me, I almost yawned there. 85.40, and then trying to buy off of that 85.40, but waiting for the confirmation and the close above 85.40 to trade the dollar on the long side. So let's see if we can get our charts back up on the NASDAQ and the S&Ps. If we don't, look at this. Amazing. We have charts. Here's the situation on the NASDAQ. No new box appearing. This is, in my opinion, a little bit weaker instrument on a relative strength basis than the S&Ps at this stage. 38.12. Let's see what we are pre-market. 38.10. Here's the daily. No new box appearing on the long term, but the daily now we have new inflection points. Kickoff up 37.20 down below on an intermediate and 39.02. So just the fact that we have a very wide, tall, high, however you want to call it, profile appearing, that actually is still saying, there's a lot of things that these profiles say, and this is saying that we're going to continue to have volatility in this instrument. It's if you look back in time, you don't see a profile that high or tall or the span being that wide. So again, we're still looking at, in my opinion, massive volatility on these indices, and I don't think this is just going to go away quietly. So on the short term on the NASDAQ, let's just take a look at some numbers. It's the December contract. Short term numbers, we've got this unfair high that was in force, 12, 16 hours ago. On Friday, here's the unfair 38.27 into 38.40. So you've got a pretty good lid there, and I think you can lean on that. You've got some targets down below this morning, 37.74 on a short-term basis on the NASDAQ. And please make sure you put your stops in if you're going to trade some of these numbers. Let's take a look at the DAX and the FTSE, because as we look at these, some big names in Europe, SAP, a couple other ones have really not come out with good earnings, and that's putting some gas on the fire with some of these European indices, which are completely reliant on the underlying instruments of the index itself. So right now, 87.21 is we're trading pre-market here. Let me just make sure that's correct. 87.22. No new boxes appearing. We're well below profiles on the daily and the weekly. Excuse me. On the 240, we've got unfair highs around 87.04. And that's our short-term support or resistance on the DAX. So, if we close below 87.04 on the some of the 240 profiles. I'm going to be looking at that as a selling point. And obviously you can be looking at this as support on the DAX right now, but I think there's some retests in order probably on the DAX, on the weekly and the daily. So we've got to sit here and kind of wait this out here. If you're going to go long, I think you've got a much better opportunity a little bit lower. And we do not have any new information here happening on the DAX, on the daily and the weekly to even regulate this trade whatsoever, in my opinion. So here's the situation on the FTSE, since, this is the European counterpart. Here's the daily, no new information. Long-term trend is down. I don't think that needs to be tampered with at this stage. Here's the weekly. Again, long-term trend is down. Okay to be short, not okay to be long. And we've also got, again, looking at our breadth on the U.S., let's see if it's changed at all this morning. We will get some new profiles appear on the weekly and daily. These will adjust slightly as the market gets near to 930. So, again, just pay attention to that. We do have some short-term time frames that are showing some strength there. But, again, we will have some new information on the daily and weekly. If we can, we'll keep updating you as we get near the market opening. Here's the situation on the 10-year. Promised a new box on the daily. That's happened. A lot of new boxes appearing on some of these wild and volatile indices and treasuries that we were looking at last week. Unfair highs 128.20. Unfair lows 126.08. Those are the new big-time numbers on the 10-year. This will be maximum support, 126.08.09. And we've got a 240 situation short-term, very thin new profile that's appeared. Let me just reel off some numbers here. 127.15, 127.31. Let's just call it 128 up top on the short term. I'm looking for this to make one more run up top, and that would probably mean that the U.S. stock market's going to maybe retest some lows. It looks like the treasuries don't want to back off. I know the market likes that because rates continue to stay lower. But I think, just by way of the way some of the profile information that we're looking at on the indices is unfolding, I think we're going to probably gravitate back down to lower numbers. And if you want to be long, those are obviously giving you support numbers to pick battles a little bit lower. Let's take a look at, I'm a little bit slanted in the other direction on the short side myself. Let's take a look at gold. We talked about gold being somewhat of a opportunity to get long again finally. Here's the daily situation. Here's why we were talking about being long. Closing above that 1227, letting somebody else kind of fight it out down below. But once we closed above, then we could come back and retest some of these areas and move higher. We got a new profile. Now we're trading above. That intermediate support area now is about 1241. Trading 1246 right now. We've been as high as 1249. So the weekly profile, we also, for the first time in 2 to 3 months here, have gotten a weekly profile appear by way of that orange bar closing. And the unfair highs here are 1251. So you're going to have something, and this was pre-market. This has been up here before this happened. We've been as high as 1249. That unfair high is 1252 rounded off. So I think we've met some targets above. You're going to have to pay attention to that area. And hopefully we can get a weekly close above there. But right now, we may rattle around down here while the stock market's trying to figure out what it wants to do. So 1241 and 1252 are going to be big numbers on gold right now. Again, where do you put, if you want to be long gold, where do you put long-term stops? I think you still got to kind of, 1227 is kind of Custer's last stance on that. You've met some targets above. I think we're going to move higher, 1272, 1273 on gold. So that's kind of what I'm thinking. And we want to try to always keep our risk-reward scenarios in line with what, is sanity when it comes to trading. So if you're considering long-term stops below 1227, you need to kind of, that's obviously a big, a big buffer of pain there. If you're wrong, you're talking about 20 points as of right now. You want to have the targets a lot higher. But if you're looking at this on an intermediate basis, obviously 1241 at this stage is going to be a much miserly stop, if you will, that you can pay attention to, and then just kind of wait it out. If we get back above, it's okay to get back in the game on the same side of the fence. So that's kind of the way I'm looking at it. 1227 is a little bit too much for my appetite for risk in general. Silver, still the same situation. Not going to spend any time on this. It's just rattling around within the fair auction, and you could look at this as with a number of different eyeglasses here. We're in a fair auction. This may be a bottoming formation to you to move higher. This may be a consolidation area to move lower. And what we want to do here is just kind of wait for silver to break out of that profile up or down before we take any, substantial stances on silver in general. Crude oil moved around quite a bit last week, and want to just kind of get back into this. Here's a daily situation on crude oil. New box appearing. That's why I pulled it up. We had that orange on the close on the day here. 81.55 is support on crude oil now. Targets above 86.86. Big range. Could see some volatility based on this big range being outputted like this. 81.55, 86.86. Big numbers on crude oil. Weekly, nothing new happening here. Long-term trend is still down on crude oil. Let's go back to IBM really quick. A little bit lower than where we started last time. Numbers 169.70. If you're going to trade this, remember these stocks, obviously, they don't open the same time futures open Sunday night and all that kind of stuff. So we're going to have a new, it's really kind of nice and interesting that we're going to have a new profile appear on IBM as soon as the market opens. I'm not going to be around, but the cool thing is that this little piece of software right here is going to give you the opportunity to look at IBM and look at those inflection points. So if I go here and I'm looking at IBM, I want to look at that, pulls it up. Well, let me pull it up this way. Let me do this. Let me clean everything up. Let me deselect everything, and let me pull up IBM. Well, we are not seeing IBM here. Let's see what's going on. I had a little bit of an error there. Sorry about that. We're going to go to break, and I'm going to find out what happened here with that little. Maybe I'm doing something wrong here. I need to pull up the index. Okay, guys. We'll be right back. I know what I did wrong here.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. I was trying to use the scanner a while ago and forgot I had a prefabricated sort down here. I was looking for weak instruments and it was overriding me actually pulling up IBM. So now we've got that sorted out. That was my fault. I'm an idiot sometimes. Mousing over these cells, you get the inflection points of the profiles, whether we're above or below, based on red or green or yellow or gray. Or orange, actually. So, again, we're pretty far down below here. And IBM, if you have the scanner, you can see the inflection points after the market opens pretty quickly here. A couple other things. I wanted to quickly just drill down into the S&P 500 stocks. We put a new data calling function in here, so it actually pulls up the indices separately off the database instead of trying to pull them all up at once as the program loads. And we're going to wait for this to pull up the S&P 500. We're up now. We're going to do a daily sort below the box. And we're going to show matching results here. So what I want to do is I want to find the S&P stocks, and I also want to look at the weekly here. So I want to filter for stocks that are just showing still extreme weakness with no hint of a new profile appearing. And as we look across the grid here, CMG. So I want to pull up CMG. I want to look at a couple other things, stuff that, stocks that are sitting on inflection points like Citigroup, Coach, Merck and Company, things of that nature. So I want to look up CMG really quick. And I want to see that, got kind of beaten up a little bit last week on Chipotle, finally. This is the weekly situation. And we closed below profile 650s unfair lows. And look at this. Cool. 649 unfair lows on our daily. So we've got something to lean on there. This has obviously not been a real seriously weak stock. So as I pull this up, you got to take this with a grain of salt, even though we're sitting below profiles on the daily and weekly. This is something that has shown pretty extreme strength in the face of some of the market pullbacks we've had. We're trading looks like 650 pre-market. No, 651. So, this is, all things considered, this is not the best short candidate. But the scanner told you that we're trading below weekly and daily profiles, and this is something I wanted to show you just to opt out on this particular feature, just from a relative strength state trading standpoint. Let's take a look at Citigroup on the other hand, though. And as we pull this up, I'm going to look at the daily situation here. This is something that's had a pretty good beta relationship with the S&Ps in general. It's probably not the ultimate candidate for the short side, but just to show you, 50.14 unfair lows and 50.48 unfair lows on the weekly. So you've had that new box appear last week on the weekly and daily. You're sitting below dual inflection points. That's kind of cool in itself because those multi-time frame views, when they line up, I think give you a little bit of a, and this is a high beta stock, and this is kind of neat because stops can be oriented around that. We're trading about 50 right now pre-market on Citigroup. So, how would I trade this? Stops have to be oriented above these unfair lows around 50.14 on Citigroup. And I do like this candidate for a short. All right, guys. We'll pick it back up again tomorrow. Steve Rhodes is coming up. You'll thoroughly enjoy him. Have a good day trading today.